Jay Powell adding fuel to the bullish momentum in the market during his Jackson Hole speech on Friday. The S&P ended up gaining 1.52%, closing at 6466.91. And we can see the exact time during Friday's trading session where the market just rocketed higher. Couldn't quite get above previous highs, at least intraday highs. We actually had a closing high on Friday, but couldn't quite get above the highs we saw in the middle of August. However, we continue marching towards this big gamma exposure at the 6,500 strike. You can see the outsized volume there. So clearly market participants believe that a tag of the 6,500 strike is inevitable within the next few weeks. Taking a step back and looking at our daily candlestick chart, we remain above the 50-day EMA. Every single dip over the last few months has been bought and bought with intensity, never even giving market participants a chance to enter at major support levels. The gamma exposure picture remains skewed higher. This is something we have been discussing ad nauseum over the last several months, both in our live stream and here in our YouTube videos. The gamma exposure picture and the skew to the upside is clear as day. And so our main thesis is that throughout the end of 2025, we're going to continue in this channel towards these higher gamma exposure concentrations. Let's jump over to our gamma exposure data graph. And I first want to start with implied volatility. You know, the VIX got crushed on Friday, down almost 15%. So we're back below the 15 level on the volatility index. The S&P implied volatility has only been lower 6.4% of the time, according to our GEX weighted volatility gauge in the last year. So volatility at an extreme low while we remain in positive gamma exposure territory. And if you've been watching our YouTube videos for a while, you know that this is a recipe for bullish momentum. It doesn't mean that there won't be pullbacks. Clearly, we got a little bit of a pullback earlier last week, but what it tells us is that those pullbacks are very likely to get bought anywhere from 1 to 3%, potentially up to 5%. You can see significant buy the dip enthusiasm entering the market when we have these conditions. Turning to the volatility index, you know, I mentioned how the VIX got crushed on Friday, and we're right back to where we were at levels that we haven't seen since earlier at the beginning of the year. Gamma exposure has been concentrated between 14 and 17 predominantly for the last several weeks. Every time we get above this 50-day EMA on the volatility index, sellers jump in, just adding fuel to the fire to the market overall. And so you can see we popped up here on Wednesday and Thursday, but immediately vol sellers jumping in at the first opportunity with some good news on Friday for the markets. Next, let's take a look at gold by looking at GLD. The gold ETF up 1.07% on Friday, bouncing nicely off of the 50-day EMA, now back above the 310 level. This is a big important level for us in particular as we are selling the 310 puts. Look at the gamma exposure picture. It continues remaining strong to the upside. The 315 and the 320 strikes have large positive gamma exposure, and this 50-day EMA continues holding as it has done since back in 2024. I mentioned that 310 level being important for us in particular. We are running a GLD weekly income strategy in one of our portfolios, and on Friday we actually were able to lock in $1,000 profit on our short GLD 310 puts, and we rolled out into next Friday's expiration. So you can see at the time GLD was trading at 306.87. So this was right before Powell talked. Of course, it would have been better if we had waited until after that to roll our position. We would have collected a little bit more profit, but still happy with the $1,000 profit that we got. And we were able to sell those August 29th GLD 310 puts for $4. So those puts now are out of the money, which is what we want to see by selling those puts as part of our diagonal strategy. And we've been trading this income strategy for the better part of 4 months now, averaging just under $1,000 a week. And so we're adding new weekly income strategies. As you can see, we have XHB, we did some SMH. These are excellent vehicles for selling shorter dated premium, hedging with longer dated puts, and on average collecting premium as the weeks go by. By the way, if you're interested in tracking our trades in real time, you can become a member at geeksoffinance.com, link in the description below. So coming back to our current chart of GLD, we can see gamma exposure continues to increase at these higher strikes. And look at the volume on Friday. We had well over 20,000 contracts, actually well over 30,000 contracts traded at this 330 strike, so way out here. So market participants continue to believe that gold will continue to perform in this environment, and it looks like market participants are expecting a breakout in the coming weeks or in the coming months up to these higher strikes. 320 and 330 look to be growing pretty substantially over the past week or so. So we could see a big breakout coming. The main thing we want to watch for is this 50-day EMA holding, as it has done many times over the last year. So we want to see that hold as support, and eventually we'd like to see a breakout above this 315 to 317 range on GLD. Next, let's take a look at Google. Google had a pretty decent day on Friday, up 3.17%, and really held up well over this selling pressure during last week. Gamma exposure remains at the 210 strike, and that's our ultimate target. We are playing a call debit spread on Google, the 200-210 call debit spreads expiring September 19th, and it does appear that we are getting ever so close to our target up here at 210. That is also our upper dealer cluster zone, and we're going to be looking to see if gamma exposure and volume are continuing to grow at these higher strikes above 210. But until then, that could be a temporary resistance point at which we'll look to exit our call debit spread position. Other names that did well on Friday include Amazon, up 3.10%, closing at 228.84, bouncing right off of this 50-day EMA, which is sitting at 221.19. So a really big, important day for Amazon. You can see in terms of the gamma exposure data, gamma exposure growing at these higher strikes all the way up to the 250 strike. And this is something that we've been talking about for the past couple of weeks. Amazon seems to be in a consolidation period here around 220, 225, but it looks like a breakout attempt may be underway. Volume in the options market is increasing at these higher strikes, and so we could easily see a move up into the 230 to 240 range within the next couple of weeks. Amazon is another name that we are trading to the upside through a wheel strategy. We've actually sold puts at the 235 strike expiring August 29th, and we're going to continue collecting premium, rolling those puts out each and every week. If we do get assigned the shares, then we'll sell calls against that position. Essentially, this is another premium collection strategy geared at collecting short-term income in a name that continues to be in a strong uptrend. Next, let's take a look at small caps by looking at IWM. Big day on Friday, up 3.92%. Breaking above that big 230 level that we've been talking about. Of course, small caps hinge on what the FOMC does. We need to see the rate cutting cycle begin in order to see bullish momentum back in small caps. Really, it's been a laggard over the last several months. Small caps just consolidating around this 220 level for several months now. Gamma exposure after Friday's trading session really starting to look even more positive. We're seeing gamma exposure growing all the way up to the 250 strike. So there is something to be said for a small cap rally heading into the end of the year, and we're seeing some gamma exposure slowly growing at even higher strikes. So that's something we want to keep an eye out for. We're starting to see some volume picking up at some of these higher strikes. I know this looks really small, but that's over 50,000 contracts traded up at the 250 level. And so if that continues to grow as we head into the next couple of weeks, we could start seeing gamma exposure growing at these higher strikes as well. So it's a little bit anticipatory on our part, but we do think that this is a green light by the FOMC for small caps to begin rallying into the end of the year. That's a big trade that we're looking for to put on in our portfolio as well. And for a limited time, you can get $300 off our yearly portfolio manager tier subscription. Use code SUMMER2025 at checkout. We've got a few spots remaining, but this promotion is ending soon as summer is wrapping up. So definitely take advantage of it while you can. Members get access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you can also track our trades in real time through our community Discord. We've got a ton of great traders in there also sharing their own trade setups and ideas as well. It's a great resource, so you definitely should check that out. Links in the description below to all of that. Thanks so much, everybody, for watching. We'll see you guys in the next video.